Hey ladies and gentlemen, and welcome to Stock Talk for the weekend and for the week of November 18th. So this is of course the SPY chart, or the S&P 500 on the yearly chart. So recall in the last video that we did during the weekday, we talked about how we were looking for some sort of support. And the support was basically a gap fill area, and that my optimal bounce target for the S&P 500 was within this range, right? You guys can imagine with market volatility, we don't have to complete the gap fill and then move on straight on to the upside, right? We can certainly go a bit lower, but we did hit my optimal reversal area back to the upside, and now it looks like the markets are wanting to push higher. So we'll talk about a couple of the main scenario here, which I still favor, is a move back to the upside and perhaps a retest of the 282 level, which acted as a resistance in the past. Now, here's the deal with this. We're coming into holidays, right? We have Thanksgiving, we have Christmas, and generally in these holidays we have lighter volumes and perhaps the market is more likely to move higher. A lot of people have been talking about quote-unquote end of year rally that may well occur, and that may have just started just now. So keeping all that in mind and keeping that we have confirmed my near-term support thesis, then we should be heading gradually, at least, to the upside. Now, let's talk about the upside first. If we do reach this target of 282, we tested it once. We've tested it twice. And I expect the next time we push through, we should be able to push through this level. Now, the big question here is, are we going to push through this level and hit 287? So we'll have to look at that really day by day if and when we get to this level first. So I will be monitoring the markets as we get through Thanksgiving and Thanksgiving Day, the day after Thanksgiving, and then the week after, of course. So remember, Thanksgiving Day, the markets are closed. The day after Thanksgiving, I believe it is a half day. So, generally keep that in mind. But now let's talk about the downside scenario, okay? So the downside scenario is if this was actually a failure and I don't see this as likely. I see actually this significantly less likely. And our group, in our Discord chat, in our course, have turned bullish the past day and the past 2 days. So that's what we were looking for. And but if that doesn't pan out, we always want to talk both sides of the equation in this case, then we would look for essentially this support level, 269.30. That is really the bottom line. And I think anything in which we close below the 269.30 level and we have trouble brewing ahead, and we're going to be looking for a retest of the 263.57 and possibly back into my boxed area. And that would be pretty negative, I think, for the markets in the near term. So keeping all that in mind, my favorable projection, at least in terms of the markets, is a push to the upside for now, at least. All right, so let's take a look at a couple of volatility. So let's take a look at TVIX. So TVIX is basically confirming in such that the markets are about to push lower. Note how initially we were pushing higher, and then all of a sudden we crossed below the 20-period moving average, making a lower high pattern. This is lower high, and this is bearish. Why is this bearish? Well, you can see that we're below the 2 moving averages here, and we didn't manage to hit the 200-period moving average. This is a bearish sign for volatility and likely for the markets to be pushing higher. So I would continue to look for this one to drop in the next few days. Okay, let's take a look at commodities, and we'll start with, of course, crude oil. Now, crude oil has been on a rather oversold bounce. Now, this bounce isn't as significant. You can see that we came down towards this below my near-term support level, and then now we're pushing higher just slightly, but look how slowly we're attempting to push up. Look how slowly, and this is, what is it doing? It's almost like it's wanting to drop again at any moment in time. So be careful on this one. While I said I talked to people in regards to crude oil last video, remember that? What did we say for crude oil in the last video? Well, we said that, even if it gets to the 20-period moving average, even if it gets to 58.83, this is likely to drop further. So, be very careful right now. This isn't a sign of a reversal back to the upside until we can see some more signs of that. This is a bearish pattern that is likely to play to the downside. Let's take a look at DWT really quick. So DWT was a ticker, the inverse ticker of crude oil, which we analyzed last week. And why did we analyze DWT? The reason is DWT is the inverse of crude oil. When crude oil is going down, DWT is going higher. So recently, obviously, crude oil has this really slow bounce back to the upside, oversold bounce. But look at this. You can see that DWT is going higher. And I said one of the theory was if we consolidate sideways, this is likely to push to the upside sometime in the future. Look at this. This pattern is likely to push to the upside. So you might be asking, well, what's going on here? Well, what you can see is pretty much at the start of the day, we open lower, right? We open lower, we open lower, we open lower, but during the trading day, we closed higher. And since we're consolidating sideways, the likely trajectory for this one is to the upside. So until we see something different, that's just the trend. So, okay. Natural gas. All right. So for natural gas, here's the big deal with natural gas, right? We have a resistance line which played out, and 4.864 around that vicinity, 4.850. Around that vicinity was the resistance line, and this resistance line stems from the fact that we've had that area of resistance in past years, and this goes back many years in the past. This was a very solid resistance line. Once again, we saw that act as a resistance this time around. Now, the big question here is, what is natural gas doing to the end of the month or whatnot? So, in my opinion, this is my opinion only, natural gas is bullish at the very least to the end of the month. So, if I said bullish, what that means is when there's dips, it could be on a reversal back to the upside. Now, of course, I'm watching this level 4.850. For example, especially a monthly close. Now, where's the month right now? We're around mid to later end of the month. So watching for the monthly close at the end of the month, and we should be somewhere in this vicinity. Okay. And the reason is, if you just take a look at this, I told this to my members as well, 20-year monthly chart of natural gas, right? When we had a massive up spike, is the market going to give us a clear-cut reversal signal on a monthly time frame? Has this ever happened in the past when we spiked over major support areas? The answer is no. The answer is no. On the first attempt when we move higher, we in fact do move higher. For the most part, we do move higher. Can you guys see this? How we close the month higher, close the month higher, close the month higher. It doesn't form a clear-cut reversal signal. So in this case, why should it be any different? It shouldn't. So what this is telling me that at the very least, I think for natural gas, when it goes down, it certainly has the potential to move up. But I'm still looking for 4.850 as a natural resistance area for natural gas. All right, /GC. So for gold futures, here's gold futures right now, and it's maintaining its uptrend. So here you can see that we hit our support line of around 1198.9, and now we're moving to the upside. Okay, was that predicted? Well, that should have been, because that was the support area. So that happened, and it's moving back to the upside. So where is it gravitated towards? Once again, we have to place emphasis on the 1241 to 0.7 level. I think you guys have heard this over and over again. There's nothing doing. I mean, for now, what we can see right now is that short term, it is what? Is it bearish or bullish? What do you guys think? Well, the answer is bullish, right? But the long term, it's more harder to quantify. So we will really have to see a push above this resistance level first to see if we can actually break out of this pattern. So, all right, guys. If you enjoy these videos, guys and girls, of course, if you enjoy these videos, please hit the like button or the thumbs up button. And of course, if you're interested in the course, we talk about all of this, and we talk about this during the trading day. We talk about the stock market, broad markets, where we're positioning our whether we're more bullish or bearish in a specific time frame. We talk about that all the time. So check out the course if you're interested in the description box down below. All right, so let's pull up. Let's see if you guys have any tickers. So again, if you guys have any tickers that you want me to take a look at, feel free to put that in the comment box down below as well. So we will be taking a look at that. So, all right, Eric, yeah, NVIDIA. It took a big hit with NVIDIA, but you can see how the markets rebounded off of that quite nicely on Friday. That's something I want to see. Evan, SOXL. So SOXL is bullish semis ETF, and that's what I'm talking about, right? Here you can see a pretty nice bounce off of our target level. So you can see NVIDIA came down, right? Brought the markets down. We opened the day pretty negatively, but we managed to push higher. So this is a pretty good sign, despite the fact that we went down 3.57%. So I'm looking for this one to push higher. It's more likely to push higher in the near term than the long term. So where's your resistance? Well, with this one, keep in mind that the resistance area in the past has been around the 20-period moving average, okay? But since, if you guys imagine, if the markets are actually bullish in the next few days to next few weeks, then SOXL is likely to be bullish as well, back to the upside. So, good stuff. Gerald, UGAZ, please, Kevin. So UGAZ is the ticker for natural gas or pro natural gas. And here's the thing about this, right? I talked about how we can certainly move higher, and this is certainly it's able to move higher, at the very least, to fill this gap or hit the gap level, and that's certainly possible for natural gas. So my point here is, if you're looking into natural gas, there's quite a bit of risk involved, or even shorting right now at this very time frame. And I think if you have the mindset of shorting natural gas and keep it for the long term, you might be on the better mindset than going long for the long term. Let's say like 2-3 months from now. That's just my opinion. But for now, natural gas, this certainly has the potential to get to the 180.73 level. So that's UGAZ, and be careful. These are 3 times leverage ETFs. So you can imagine, for example, it doesn't always, but like if natural gas is moving 5% one day, 5% down, are you able to sustain a 15% hit onto your account? Or whatever you allocate it into the ticker? That's something you have to evaluate very carefully. All right, Moviegoer, thank you for your valuable analysis. You're welcome. Glad to see you here. And would I please take a look at Amazon? So thoughts regarding Amazon? Similar thing here, where Amazon, you can see that for now, it looks pretty good, right? And I think we came down to fill the gap area down here, and now this is wanting to push higher. So I would look for this to be pushing higher as well with the rest of the markets if they do recover, as we expect. So looking good. And right now, I think what would really take that scenario off the table is if we manage to close below the 1542 level, then we would look for more downside to come. So keep that in mind. Addy boy, great content. Appreciate it. K9 will do your last one. HRS. Harris Corporation. Okay. So the thing you can see about this chart, let's actually take a look at the long-term chart really quickly. So looking at the long-term chart, you can see that this is more bearish, right? We are below the 50-period moving average, which has acted as support in the past. So now the thing is, if we can break above the 50 and the 20 and close above that level, that's more bullish, and that's something I would be looking for. But for now, it doesn't seem like it has enough energy to move to the upside, and this looks like it wants to be moving lower. At the very least, let's see, the resistance level is around 170. Yeah, it looks like it wants to lower. So unless we can close above, let's say 158, this is a high risk, I think, in my opinion, in terms of a possible long position. But if you are interested, make sure you always have you have a stop loss on this one as well. All right, guys, appreciate everyone for watching. Thank you so much. Keep making comments. You guys can check out our Facebook group, our course, and we got a lot of things going on these past few days. I added quite a bit of tickers to our members section as well, the tickers, monthly tickers to watch this time around. Thank you very much, and I'll see you guys next week.